All right, today we're putting on our detective hats and diving deep into the technical signals of a stock that's been making some serious waves, STX. We're going to follow the clues, piece together the data, and see what kind of picture it paints. So let's get this investigation started. Okay, so our investigation starts right here. STX just closed at a really impressive $278.79. Now, that is right up near its 52-week high. And whenever a stock makes a move like that, it definitely starts turning some heads. And all that attention brings us to the big question, right? The one we're here to answer. Is this thing a rocket ship just getting ready for the next leg up? Or is it a house of cards? Just one gust of wind away from tumbling down? To find out, we've got to follow the clues. We're going to treat every technical indicator like a piece of evidence in a case file. Let's start digging in and see what story the data is telling us. All right, first up, the case of price and volume evidence. In any good investigation, you always start with the most direct evidence. So we're going to look at the raw price action and, just as importantly, the trading volume behind it. And wow, right out of the gate, the clues are pretty compelling. Look at that. The stock jumped almost 5% in a single day. But here's what's really crucial: the volume. Over 2.8 million shares changed hands. See, high volume on a big up day like this is a classic sign of conviction. It tells you this wasn't just some random fluke. And to top it off, that positive accumulation reading, that basically confirms that buyers are in the driver's seat. It's a measure of buying versus selling pressure. And right now, the buyers are absolutely in control. So a single day is just one piece of the puzzle, right? To really get the full context, we need to zoom out. It's time to map the trend and look at the bigger picture. And our main tool for this is the good old simple moving average, or SMA. Just think of it as a way to filter out all the daily noise. It gives you a nice, smooth line that shows you the underlying direction of the trend. The rule of thumb is super simple. If the current price is trading above that line, the trend is up. Easy as that. And this chart, wow, it just perfectly illustrates what's going on with STX. The current price isn't just above its key averages, it's like miles above them. Just look at that 200-day average, way down at about $157. This isn't just a casual uptrend. The evidence here is screaming that we're in a powerful long-term bull market. Okay, so the trend is definitely strong. That's a check. But now we have to ask, how much power is left in the engine? To find out, we've got to pop the hood and check the momentum indicators. And our main gauge for momentum is the Relative Strength Index, or RSI. The best way to think about it is like a speedometer for a stock's price. It tells you how fast the price is moving. And the key number you always want to watch is 70. If the RSI gets above 70, it's kind of like the engine is overheating. We call that overbought. So where does STX stand? It's clocking in at 58.67. And honestly, that's pretty much the sweet spot. It's a really strong, bullish reading, which is great. It confirms there's plenty of momentum, but it's not in that overbought danger zone yet. So this clue, it suggests there could still be more room to run to the upside. Okay, let's look at some other corroborating evidence on the dashboard. First, you've got the on-balance volume. It's high, which is great. It just confirms that volume is flowing in the same direction as the uptrend. Then there's the MACD histogram. It's just slightly negative. This is a subtle clue, maybe hinting that the stock is taking a little breather after that big run-up. And finally, the money flow index is sitting right in the middle, neutral. That shows a healthy balance. So yeah, while there's a tiny clue pointing to a pause, the overall case for momentum is still looking really solid. Now, so far, the evidence seems to be pointing in one very clear, very bullish direction. But, in any thorough investigation, you can't just look at the obvious stuff. You have to dig deeper for the hidden signals, the clues that might suggest a twist in the case. And believe me, every investigation has a twist. Just when everything seems to be adding up perfectly, you find that one piece of evidence that, well, it makes you pause and take a closer look. And this twist comes from an indicator called the stochastic RSI, or stock RSI. It's basically a much more sensitive, faster-moving version of the RSI we just talked about. Its whole job is to be an early warning system, to flag when a stock might be getting exhausted in the very short term. A reading of 100 is the absolute maximum. It's an extreme overbought signal. And what's STX's reading? 100. A perfect 100. This is a critical hidden signal, folks. It's basically screaming that while the main trend is strong, the stock is extremely overbought right here, right now. And very often, a reading like this comes right before a price pullback, or at least a period where the stock just moves sideways for a while. Now, another cautionary clue has to do with its volatility. We measure this using something called the average true range, or ATR. All this does is tell us how much a stock's price tends to swing around on a typical day. It's basically our go-to for measuring risk and choppiness. And the ATR for STX is $15.59. So what does that actually mean? It means on an average day, you should be prepared for this stock to swing up or down by about $15 to $16. That's a really high level of volatility, and it adds a pretty significant layer of risk, especially for any short-term plays. And there you have it, the two sides of the story laid out right in front of us. On one side, you have all these bullish clues. It's above all the moving averages, there's strong volume, positive accumulation, a healthy RSI. But on the other side, you've got these cautionary signals that stock RSI is maxed out at 100, the volatility is super high, and there's that little hint of a pause from the MACD. This is the central conflict of our case. All right, it's time for the verdict. Let's assemble all the pieces of evidence we've gathered, weigh all these conflicting clues, and see if we can arrive at a conclusion about the technical state of STX. And here's one of our most important final pieces of evidence. It's a statistical analysis of the trend. Basically, it calculates a fair value for the stock based on its recent price action. So the model predicts a price of about $276. The stock is currently trading less than 1% above that. Now, this is a huge piece of the puzzle. It tells us the recent surge isn't just some crazy, wild anomaly. It's actually statistically justified by the underlying trend. So let's lay out the key levels to watch. Think of this as the battle map for the bulls and the bears. First, you have resistance up around 282, but the real action is around the pivot point near 275. Bulls want to hold above that. Then you have layers of support at 272 and, the big one, down around 266. That's the major line in the sand. So let's put it all together. What's the final outlook? The overall trend is, without a doubt, strongly bullish. The key evidence, like the price being above all the moving averages and having strong money flow, confirms that. But there's a warning. That short-term overbought signal we found is a big one, and it suggests a pause or a pullback could be coming. So the critical condition is this. The bullish trend stays intact as long as, and only as long as, the price holds above that major support zone between 266 and 268. And so that leaves us with the big final question, doesn't it? With a really strong uptrend, but also with these very clear short-term warnings, how do you play it? Do you see this as a potential dip to buy into a strong trend? Or is it a sign that the peak is just too close for comfort and you should avoid it? That's the puzzle the evidence leaves us with.